All right, everybody, let's get back into it. It's your boy Relly. We're gonna hop in with the blockchain Odyssey. Nothing more than this recording our journey of going through this whole crypto market experience and teaching you guys how it is to navigate through it as well. That's all it is. That's all it is. That's all it is. So let's go ahead and start learning how to use these indicators because they will be very, very useful for you moving forward. Now I'm gonna go over my favorites that I use, right? Because there's not too many of them. I can go over all these very, very quick and very, very simple with you. So let's start off with the 2-year moving average multiplier. This is just showing you just the average of the 2 years. Let's actually move this to the week so we can get more data into it. Now, I don't use this one too often. It's not one of my favorite, but you can see every time that we get above the red line up here, we instantly get corrected back in. And every time we get below the green line right here, we eventually get sucked back into this gray clouded area, which is pretty much our moving average, saying like on average, we're going to be within this gray band. We fall below it or we go up above it, we'll just get magnetized back to the norm. Now, it's not one of my favorites. I don't really use it that often, but it's something interesting to look at. Next one I like to use is the 400 days simple moving average. I use this one a lot. It's very telling, especially if you look at it on the day chart specifically, of when a bull market is actually taking place. So, for example, let's go back to right here. This is the top of the market back in 2017 of December, the top of the bull run that Bitcoin really just start shitting on people. It really ran up and went crazy. But once we hit that high and we start selling, we start to fall below the 400-day moving average. Once we cross below the 400-day moving average, that's pretty much signaling like, yeah, we're in a bear market. Like, this is bear market territory every time we get below this. But then once we capture and get back above it, excluding this big drop right here because this was COVID, but once we actually get above it and we hold it as support, as you can see, we bounced off of it right here. Once we recovered from the whole COVID crash, and it's telling. We came all the way back up, bounced off of it again, and we made the all-time highs of the last cycle of it almost 70K. But then once we fell below it, came back up to retest it. Like, yes, we are actually below it now, just to retest. Like, are we about to, like, do something like COVID and get back above and hold it as support again and keep going? No, crash. And this was our bear market. And then we came and we captured it. Once we captured it again, kind of just coasted above it until it was like certified. Like, yes, this is where we at now. We're above it. We're about to start running. And we're still above it. That means we're still gonna start running. You know what I mean? So until we fall below the 400-day moving average, I can just continuously see Bitcoin going to the upside or, just coasting sideways, whatever. But once we fall below it, it's signaling a for sure bear market to come. Now, the one thing I like to use alongside the 400-day moving average is the moving average exponential. And normally when I use the EMA, I'll come to the settings and I will put it on the 200. It's pretty much saying 200-day EMA. So it's measuring it from every 200 days. And it's pretty much the same thing as the 400-day moving average, but it's the way that they correlate with each other. You see these simple crosses that they have where the 200-day EMA will cross below the 400-day moving average, and that's signaling that we're about to start going into a bear market. And as you can see, if you would have caught that signal and you would have sold everything before this big crash, you could have saved a lot of pain from yourself. And then if you will wait until we have a cross on it again, it's pretty much signaling like, yeah, we're in a bull market again. It's time to go ahead and be risk on. Of course, you will miss the bottom of the bear, but it's not like you're supposed to wait on the cross. You're supposed to use it to kind of judge where you are within the cycle of Bitcoin itself and to predict what it is that you expect is supposed to be coming next. Same thing over here. Like when we fell below the 400-day EMA, the 400-day moving average, the 200-day EMA in blue crossed below it all the way back here in February. And then we came all the way back up to retest the 400-day in April, which was the complacency the head of the complacency bounce, and we completely fell off the cliff after that. And it wasn't until we crossed back over here in May of 2023 where things really start to look bullish. But we captured the 400-day, and we came and we bounced off of the 200-day EMA, and we held both of those as support together. And so far since then, they have not crossed. So I like to use those two together because they have a lot of confluence with each other. So let's go ahead and get rid of them now. Let's move to the next. Bitcoin rainbow wave. It's okay. I'm about to say it's not even showing. Don't use this a lot because there's a lot going on, but it's just showing you. First, let's move this back to the week so we can get more data. It's literally showing you just the waves of Bitcoin, pretty much how the markets are flowing. Right here, this dark red spot is pretty much where we hit our tops and we come back, boom. Come back up, hit the red top, boom. So we just pretty much riding this wave. It's kind of been calculated already on how it is this wave will be moving based off of past experiences in the law of diminishing returns, and just how this whole market can be moving forward in the first place. So like with this indicator is saying that we should be topping like within this range around 200k Bitcoin, you know. So we got a good little ways to go until we get to that point. Hopefully it takes hopefully we get past it, maybe we can blast right past this and make even more money. But this indicator has been calling it pretty solidly. So for one, let's go ahead and get rid of it. Go to the next one. Fixed range volume profile. Really do love this one right here, and you can't use it unless you have the premium the premium package. But there's also the tool that you can use for it, which is right here, the fixed range volume profile as a tool. So you don't have to necessarily have it as an indicator. But let's just say I want to look at this range right here, just this specific range, and I want to know the volume profile of it. So if I was to measure it out, click here, drag it, click there, it's pretty much showing me where most of the trading happened within this range. Go ahead and get a little closer up so you can see it a little better. This black line right here is called the point of control, meaning every time we came to this area, it was a control of either the bears or the bulls. The bears want Bitcoin to fall to the ground. Bulls want Bitcoin to run up to the sky. So it's who has control. This is the point of control where most of the trading was happening. Every time Bitcoin got to this point, we just had a major sell-off. And even right here, as we was trying to get up to it, we was having major sell-offs. It's just that the lows wasn't going that low no more because we was picking up more strength from the bulls until we actually captured the point of control, and bulls had control, and we left this range. Now you can also go to the next range and be like, okay, so what's the point of control for this area right here? So it's gonna be the exact same thing that plays out. Bears are trying to get control until bulls ultimately win at the end of the day. Well, at least up until we actually have a for real bear market. So that's what the the fixed range volume profile would be, but it will automatically do it for you. You can't have multiple ranges up there. That's why the tool is actually better than anything, and you can find it right up over here up under like the projections volume based, which will be right here, the fixed range volume profile. Now, liquidity volume, nice thing to have, is just showing you how much volume of liquidity is actually coming in during a certain moment of time. So during these moments where Bitcoin starts to really ramp up and go on a run, you can see these big green candles all over the place, showing you that it was a lot of buying volume in this area. Like even this one right here with this big red one in the middle, that's what stopped us for a second because everybody was taking profit for a little bit. But it was just that one day, because after that, people start buying again. Big pressure, big pressure. And then we started to lose, we started to lose that pressure. Because as you can see, like it really gets crazy during bull markets. Like the volume can go up through the roof, especially when a lot of money is getting pumped into the markets during the right time periods. But that's what it is that you use the liquidity volume for, just to measure the volume of liquidity going into the market itself. Now we got like the moving average convergence divergence. I don't even use this one, to be honest with you. Oh, this is the MACD actually. I do use this. I just don't call it that. We just call it the MACD right here, MACD. But pretty much what it's showing you is, and I'm gonna put it on the weekly so we can have more compressed data. So the MACD is pretty much showing you whether or not we're about to have, bullish crossovers towards the bearish crossovers. Once it's in green up here, these little lines is going back and forth. If it's in green, that means we're pretty much in a bull moment. But then once these two lines cross each other and the blue goes underneath the which is orange line right here, then it's pretty much signaling that we're about to start going into a free fall. Almost similar to how the 400-day moving average and the 200-day EMA represented in the Bitcoin chart, like the very first couple indicators that I showed you, operate. It's the exact same thing, but for the MACD specifically. And then it'll show you down here on the shaded area, like this is green, dark green right here. I mean, there's a lot of buy pressure, but then the buy pressure starts to fall off, so it's light green. And then it turns over to high sell pressure until it starts to fall off, and it turns into like a light red, pinkish little shade that you can see, like kind of like right here. Really, it's kind of hard to see, honestly. It's not, I don't know. The red is just way too light. It's kind of blended in with my background. But that's how we use the MACD specifically. We just look for these crosses to where the blue line cross under the orange line is pretty much showing you that we about to have a little bearish moment. Even right here, if you was to see it, that means that we was going into a bear moment, and we did crash even further from that. But then once you do have the crosses at the bottom where the blue line captures on top of the orange line, you could have started bidding right here within Bitcoin and ran it up to the top. That's why these indicators are very, very useful, especially if you're using a lot of them at once. Let's look at these two right here. I didn't click the other one. This is the pi cycle top and bottom indicators. Just showing you exactly where we top at. If you see this thing flash on, it means you're at the top for Bitcoin for the entire cycle. If you see these flash on, it means you're at the bottom. Once you hit the bottom, you always get that mean reversion parabola until you have that nice little revert back to the norm. Same thing right here. You hit the bottom, then you had a nice little mean reversion bounce, and then we kind of went sideways and went back to the norm until we actually caught up with the actual sentiment. People just be getting in that hype, getting the cheap prices, and it shoots everything back up. Take a little profit, everybody kind of settle out the dust, and they start, picking off the projects that they want to start investing into or trading, gambling into, however it is you want to look at it. But the pi cycle top and the pi cycle bottom is just showing you the top and the bottom of whatever chart you're looking at. So let's go ahead and get these off real quick so I can add some more indicators. We're just going through and we're just looking at a bunch of things so you can understand there's a lot of different ways of looking at these graphs in a lot of different manners, and you can always go and just steal all this stuff and use it for yourself. Now the relative strength index is showing you the strength of the buy and sell orders. So for one, we have the mid range right here, which is at 50. That's the midline. Anything at the midline, I mean, it's fair game. It's no telling if it's gonna be bullish or bearish. We're fighting for it right now. Whoever captures the mid game and we move bullish or bearish, then it's gonna be a big move to either side. Now, anything overbought will be above 70. Anything oversold would be below 30. And as you can see, if we get above 70 and you get that nice color coordinator into it, let's go ahead and this is what these drawing tools are real handy for, right? You see, we cross above 70 right here, meaning it's overbought. That doesn't mean that you need to sell anything because we can stay up here for an extended period of time. It's just letting you know that it's during this time where you need to be a little more cautious on where it is you're taking profits, because at any given time, things can flip around. But whenever the strength index is going up, that means that bulls are having a lot of buy pressure going into the market. And then whenever it starts to go down, that means a lot of the buy pressure is leaving the market and it's turning into sell pressure. People are starting to take profits. So that's why it just kind of moves in like a, like a wave format, because people buy, then they sell, then they buy, then they sell, and it just continue this process, pretty much just gauging off of the indicators itself. For example, let's say you wanted to get into crypto back in the day over here while we was hitting 30. You would have bought in pretty much at the bottom of the market on the weekly interval chart. And then say you wanted to sell once you seen Bitcoin getting up here above 70, you could have sold up here within this area, as you can see where the cursors are for the RSI and on the chart. So you would have sold here, and then you would have wanted to buy back later once everything kind of settles out the dust. You could have easily just bought back in within this whole COVID crash, right? And you would have got the same. You would put $1,000 in right here, run it up 200%, put that profit right back in down here, and run it back up again. Just rinse and repeating, rinse and repeating. The RSI helps you out with that. Now it's not like 100% accurate all the time. That's why you use multiple indicators, because you don't want to just rely on one thing, because it's not going to be telling you the entire truth. Now, the stochastic RSI is pretty much the exact same thing, but just in a different format. So you'll see the exact same wave patterns, but it's in a different format. Like you can see when it passes above 70 here, up here on the chart, it's around this little moment, but then once it actually goes back down under 70, it's showing you that it's losing strength, we're pretty much right here at the very top of the market. Same thing as the RSI, just looks a little different, and it shows you in a different format. Last thing will be the volume profile with the fixed range, which is the exact same thing I showed you with the point of control earlier. This is the weekly point of control for Bitcoin. Bulls took control of it. If you want to go down to the daily and look at it like that, bam, it's the exact same thing I showed you earlier with, it's the exact same thing. Same point of control. It's the exact same thing. It's just that with the indicators, it's going to take up one of your indicator spots. So if you're doing it for the free ski, then it's taking up one of your spots. You only got one more spot for one more thing. You can't add nothing else. That's why I like to use the drawing more. That way I can, I can kind of finesse and move things around on my own manner. But as far as indicators go, that's pretty much it under my favorites. Now there's a lot of different indicators out here. You can come up here and just start looking through stuff if you want to. Accumulation and distribution. If you want to look at the auto pitchfork, you want to look at bull bear power, Bollinger Bands, which is also something kind of nice when you're looking at the charts. Let me get rid of this real quick. Like Bollinger Bands is kind of like the other indicator I had showed you in my favorites, the 2-year moving average, where everything kind of moves within that gray area. If it goes above, then it instantly reverts back within the area. If it goes below it, instantly reverts back within this area as well. So that's another good thing that you can use. If you don't know if you're above it, then it's almost a good time to start taking some profit and sell. If you're way below it, then it's a good time to go ahead and start packing the bag up and racking it up. That way you can make the biggest buck for your investment. But as far as indicator goes, pretty much went over everything that I have under my favorites thing. And you just need to get up here, see how it is the chart reacts to them. Also get my booklet, because I go over quite a bit of those indicators along with it to see different divergences and hidden mechanics within the indicator itself. So please go ahead and check that out as well, and we'll get back to it with the next video, where we'll be talking about exactly how it is you need to be getting in these graphs and measuring stuff out with all the tools that we talked about from the toolbar kit and the indicators working synergetically.